Modern global enterprises generate an immense volume of financial records every day. Payroll files, procurement invoices, and tax filings flood into corporate systems at a scale that often overwhelms traditional monitoring capabilities. To manage this data, most organizations rely on rule-based natural language processing and static Boolean logic. These traditional systems act as rigid filters. They are programmed to flag any document that deviates from a hard-coded baseline. This creates an operational bottleneck. Compliance teams are left facing a pile of red flags that are overwhelmingly false positives. Human investigators frequently experience alert fatigue, spending their hours manually clearing alerts for legitimate transactions that triggered a sensitive rule. This volume of noise makes manual review impractical and allows sophisticated fraud to hide in plain sight. These alerts persist because traditional systems validate documents in isolation. In reality, legitimate complex transactions often span multiple enterprise systems, including payroll, tax, and procurement. When an isolated rule engine examines only one piece of a multi-system transaction, it often misinterprets a legitimate quirk as a critical error. Enterprise architect Varsha Shah has developed a research framework specifically to address this isolation problem. Shah's research proposes that solving the false positive bottleneck requires an architectural shift from isolated document validation to cross-document probabilistic graph correlation. Modern compliance failures persist despite better text extraction because rule engines still struggle to interpret the relational context between distinct systems. Consider a complex global transaction involving a payroll record, a vendor invoice, and a corresponding tax filing. A standard compliance system checks the vendor invoice exclusively against strict procurement policies, ignoring the other related documents. If there is a slight, legally permissible inconsistency in the invoice, the system triggers a red alert. Because the system cannot see the corroborating tax and payroll data, it flags the invoice as fraudulent. Sophisticated fraud specifically exploits these blind spots, operating in the gaps between isolated enterprise systems. Document-level analysis inherently lacks structural awareness of the broader transaction, which results in consistently high false positive rates. Before a system can correlate documents, the data must speak the same mathematical language. This requires the first component of the architecture, a cross-jurisdictional normalization layer. This layer automatically harmonizes disparate currencies, differing tax structures, and varying international reporting standards into a single unified format. This ensures a transaction originating in one country is evaluated with the same consistency as a transaction from another. Without normalization, identical financial activities look mathematically distinct to the AI, making cross-document correlation impossible. With standardized data, the system moves to the graph-based entity correlation engine. This engine maps specific entities, such as employees, vendors, and routing accounts, creating a connected network. This network provides a unified view of enterprise activity, connecting the previously isolated payroll, tax, and procurement data. This mapping reveals structural patterns and anomalies that are invisible during standard document-level reviews. Establishing this relational awareness allows the system to distinguish a legitimate, complex transaction from a fragmented fraud attempt. The final component is the adaptive probabilistic risk model. Binary rules are replaced by continuous, confidence-based scoring. Instead of a simple pass or fail, the system assigns a risk value. The model evaluates the entire connected graph to calculate risk. The risk score decreases as the system finds corroborating data points within the network. Legitimate transactions that once broke a strict rule are now contextualized and cleared by the surrounding data in the graph. The model uses multiple indicators, such as source reliability and historical patterns, to prioritize cases that truly require human intervention. Replacing static rules with contextual probability prevents the system from alerting investigators to explainable anomalies. The framework was evaluated using approximately 3 million records collected over 5 years across 4 regulatory jurisdictions. During the evaluation, the architecture achieved 91% precision, 87% recall, and an F1 score of 0.89. This high F1 score indicates a strong balance between precision and recall, which directly translates to a 76% reduction in false positives. This means investigators spent 76% less time reviewing cases that were ultimately legitimate. The system also reduced manual audit effort by 40%, allowing compliance teams to focus on the highest risk cases. These performance metrics demonstrate that the architecture provides tangible operational value by significantly lowering the manual load on compliance teams. The framework relies on a continuous learning loop fueled by human audit outcomes and investigator feedback. Confirmed fraud cases strengthen future detection patterns, while rejected alerts automatically refine the risk scoring to prevent future false positives. This adaptation allows the system to evolve alongside business changes without requiring manual rule updates. Organizations can move from reactive compliance, identifying issues after they occur, toward predictive governance. Effective AI-driven compliance functions as an ongoing intelligence system, anticipating structural risks and vulnerabilities before an audit even begins.